Thank you very, very much, Sue, and good morning, everybody. Boy, this is fantastic. I can't tell you how excited I am to see a room full of people to have this conversation here in Australia. Thank you all for what you're doing, for what you're here to discuss today, and the ideas and the concepts, and hopefully the commitments that you will leave here having made. I want to thank the Climate Institute and the Australian Environmental Grantmakers Network and our colleagues in philanthropy here in Australia who have helped support this conference and who are part of this larger movement worldwide. We are at a moment of enormous world historical challenge and enormous opportunity. And we often say that in philanthropy, that the challenges are just another way of presenting opportunities, but this one is different. This one is qualitatively different. This is quantitatively different. This is an existential challenge. It is one of the three great anachronisms of our time: carbon-fueled capitalism. It served us well for 250 years after the invention of the steam engine, but it's now burned itself out because it's burning up the planet. It brought a lot of prosperity. It brought a lot of development around the world. It was a very good thing for a very long time, but we now know that it also has produced enormous costs and an existential threat to the very vitality of this planet and all forms of life. 7.4 billion human beings and some 2 million other known species who share one ecosystem, one climate, and increasingly, and I think this is important, one polity. Paris suggests that we are finally moving forward with a global framework that's not just a multilateral agreement among governments, although it is, but more profound, I think, it's a polylateral agreement because it requires action and includes commitments from the private sector and civil society and the nonprofit sector. All sectors, representing all societies, now have a moral obligation to move forward to solve this existential crisis. So it's a very, very exciting time. And I think we can take some encouragement, as the wonderful speakers who have already started this conference this morning have said. We can take some encouragement from what's happened, both in Paris, and also I think we should take note of the SDGs and the 2030 agenda that was also adopted through the United Nations Sustainable Development Summit. These are encouraging moments that give us hope that, in fact, human civilization can save itself and all other forms of life on this planet. So I'm very, very excited, and when I come to a meeting like this, I just get more excited. I would prefer to be sitting and listening rather than speaking, but I'm going to tell you a little bit of the story of how our foundation navigated this interesting journey, and then I really look forward to the conversation and questions and discussion. I want to tell you the story of our journey in a very honest way, because I think that's important. I think we need to learn from each other in a very open and transparent kind of fashion. It's not easy in some cases to make the kinds of decisions that we know are the right decisions, but moving an institution, especially in our case, an institution that was founded with fossil fuel wealth, I think has perhaps some lessons for others. What we found along the way was to move into a place where we could announce in September of 2014 that we were divesting from all fossil fuels as rapidly as possible. We had to change our investment philosophy. We had to change our investment governance in terms of the members of our investment committee. We had to change our investment manager. And we had to do a lot of data work to find out exactly where the money was. And each one of those steps actually took some years. We started this conversation in the early 2000s, not too long after I had arrived at the fund, because, quite frankly, I was frustrated. I had this wonderful foundation with this fantastic history, and I was only using 5% of the assets to support its very ambitious mission, which is to help build a more just, sustainable, and peaceful world. The other 95% were locked off, managed by a wonderful group of very senior and very successful investors in a voluntary investment committee and a set of fund managers who were producing good returns. But it was very frustrating when I started having conversations with them about how we might begin the process of aligning our investments with our mission, that the answer was a very traditional answer. You're a very nice guy. You do very nice work. You go over there and keep up the good work. Leave us alone. Our job is to produce absolute returns and to give you more money to work with. And this just wasn't a satisfactory answer because it's not true. You don't have to separate the two. And that's essentially the concept that we're all proving. So I knew I had a lot of work to do to kind of break down these institutional and philosophical barriers. So I began to think, what's the way to start this process? We are a very deliberative organization. We're 75 years old. We were founded by the third generation of the Rockefeller family in 1940. These were the famous brothers of the sons of John D. Rockefeller Jr. that included the governor and vice president Nelson Rockefeller and David Rockefeller, who had been chairman and CEO of the Chase Manhattan Bank when it was really the global bank, and another brother who was governor of the state of Arkansas, et cetera, et cetera. They were powerful young men in one of the most prominent and wealthy families in the world at the time. And they organized this foundation with the encouragement of their father, who said, okay, boys, it's time to get serious about the family business. That's not oil, it's philanthropy. And so the Rockefeller Brothers Fund was organized, and we just had the 75th anniversary, so we got to study our history. And one of the things that was so wonderful to see in the, shelves and shelves of documents that have been collected over the years was a commitment to the environment from the very beginning, and a commitment to the globe from the very beginning. Now, the environmental manifestation of that commitment in the early years was really about conservation. And the family and the Rockefeller Brothers Fund did a lot to help conserve a lot of environmental ecosystems and natural beauty. But over the years, it moved from conservation into ecosystem management. And then early on in the 1990s, the fund began to see climate change as a threat to all of the beautiful nature that it had conserved and other vulnerable ecosystems around the world. And so they began to want to know more about what was happening in the climate, and they started funding climate research in the 1990s, which is very early, of course, in the process for foundations. So there was this ethos that we could build on, and that was our great strength going into this process. So when I came to the fund and kind of found this division, this barrier between the investment world and the philanthropic world, my strategy was to say to the investors, all right, I understand your point of view. I have a different view, but I understand where you're coming from, and you've done a great job for the fund. But we ought to be thinking about our proxy votes, because those are economic assets, and we're not utilizing those economic assets. And they said, well, that makes some sense. So we, as I said, being a very deliberative institution, we spent about a year in a committee process with investment committee members and other members of our board. By the way, half of our board are members of the Rockefeller family, so this is very much a family institution still, and some outside advisors. And we came up with I think a really, at the time, this was 2005 when we published it, a pretty progressive document of proxy voting guidelines according to E.S.G. principles. But the key, the voting the proxies was good, and we instructed our managers to begin to follow the guidance. But what was more important was the education process, because having the debate about E.S.G. and what that actually means in practice was a wonderful opportunity to have a dialogue with all of our internal stakeholders about these very, very important concepts. So that was kind of step one. And then in 2010, I went to the board and said, we have a governance problem. Because remember, I said earlier that one of the challenges we faced was we had a committee that had a kind of anachronistic view of how philanthropic investment might be managed. So I know I needed to kind of change personnel on the committee, but I didn't want to have a complete coup d'etat. So I said we had a governance problem. I looked at the structures of the fund, and I was very proud of the fact that the RBF has term limits for our board of trustees, and they apply equally to family members and non-family members. But lo and behold, we didn't have term limits for our committees, none of our committees. So I said to the board, this is not considered best practice in the world of philanthropy. We ought to have term limits on all committees. And they said, boy, you're absolutely right. So we adopted a bylaws change, and we then had term limits, and that gave us the opportunity over a few years to thank some members of the investment committee for their dedicated service and bring some new ideas into the mix. And that was transformative. So that was the next step. Then in early 2010, now having a more amenable committee, a more interested committee, we went to the board with a proposal that we set aside 10% of the total value of our assets. At the time, the 10% equated to about $86 million, and that we begin looking for ways of proactively investing those assets in market rate investments that would support our mission, primarily in the areas of clean energy, new technology, and other business strategies to help reduce carbon emissions and fight global warming. So we got the board to adopt that. We had to hire a new investment office because the old investment office was structured in a way that couldn't do it. Their business model, we're not big enough to have our own CIO and a full investment staff, so we engage what is known, at least in America, I don't know whether you have them here in Australia, as OCIOs, which is outsourced chief investment officers. And there's a kind of a boutique industry with some very, very good investors now who serve universities and colleges and foundation endowments of about our scale. Some were less than $1 billion, more than 500,000, less than $1 billion. And they have a full bench of real investment professionals in all the asset classes, and they've proven to be very good. But our original OCIO had a completely commingled fund structure and 14 clients. So now I was not only up against my own investment committee, I was up against 14 other institutions who were not eager to change because they were getting very good returns. So I convinced the investment committee and the board that we had to get an OCIO firm that was really committed to helping us implement our goals of investing 10% of our endowment. So we went through a new RFP. I mean, this is a lot of work, and I'm telling you this story because I think it's important for people to understand. You have to be really intentional, you have to be very strategic, and you have to look at all the elements, and you have to tear them down. You have to take down each one of these barriers and find a path forward. So we hired a new OCIO, a firm called Perella Weinberg Partners, and we had 13 responses to our request for proposals. Perella Weinberg had a very interesting approach, which was, we are not experts in mission investing or impact investing, and we're not experts in clean energy markets, but we see that that's where the world is going to go, and we think it's in our business advantage to get there early, and we see working with you at the Rockefeller Brothers Fund as a way of doing that. And that was a very compelling pitch, especially when the other pitches weren't any more compelling, actually, in a lot of ways. And we thought these people are really hungry to do this, which is what you really need. So we hired them at the beginning of 2014, and the first mandate we gave them was to really ramp up the investments from this 10% set-aside. But then I decided, because of Ban Ki-moon, who had called the Global Climate Summit for the UN in September of that year, that we needed to do something more, and we really needed to really get serious about divesting. Now you can imagine, again, with 9 members of the Rockefeller family sitting around the boardroom with 9 other very thoughtful leaders, putting this concept on the table was an interesting experience. And I have to tell you, they were fantastic. They are really smart people. They are, I think half of the Rockefellers on our board have PhDs in various fields. In the DNA, they inherited all of John D. Rockefeller's business acumen and also his enormous philanthropic ambition. It's a wonderful combination. So they put us, through a really serious conversation, and so did the other business leaders who serve on the investment committee and on the board. But we said to them two things. This is a foundation that has been a leader on climate change since the 1990s, and now in 2014, almost half of our grant making worldwide is about climate and energy. All of our work in China is climate and energy. Most of our work in the United States is climate and energy. We're working on fighting coal power stations in the Western Balkans. We're working on with the United Nations in the UNFCCC process, including helping to provide additional capacity to the Secretariat for organizing both Copenhagen and Paris conferences. This is a foundation that is recognized as a leader on climate change. Continuing to be invested in fossil fuel companies was the same as if we were making grants for lung cancer research and being invested in tobacco. It's a moral inconsistency, and a hypocritical one at that. And the Rockefellers, among other things, are very ethical people. And the moral argument had significant sway with them, but it wasn't quite enough to get us over the decision. Fortunately, because we have been funding a lot of grantees in this space, including some organizations represented here, we had been funding research into carbon markets, carbon futures, renewable energy. And one of our grantees, of course, is the Carbon Tracker Initiative. And as you know, these are pretty smart City of London investors who went off to form an NGO and a think tank to really study these issues. And we were then able to bring to this conversation that started with kind of the moral ambiguity of the problem to an economic problem and say, look, if we have any chance of doing what science tells us is now absolutely mandatory, as our wonderful presenters have said, staying at least below 2 degrees C, hopefully getting to 1.5 degrees C, and getting to net zero, if we have any chance of doing that, 60 to 80% of the known fossil fuel reserves simply have to stay in the ground. And that means the companies that own those reserves are going to be losing value over time, because those are going to be stranded assets that are on their books. And the economic argument coupled with the moral argument really got us to where we needed to be. And so we were thrilled that we were able to participate in September, as Sue said. The day after the climate march, the timing was not accidental, but it was wonderful, because the march, which all of us participated in, was one of the most moving experiences of my life. I was there with my wife and 13-year-old son at the time, and it was a huge expression, 400,000 people joyously, peacefully marching through the streets of Manhattan with the New York City police doing a wonderful job of helping everybody and guiding it. And it was a massive expression of love for our planet and a demand for collective action. So the next day, we had the press conference where we announced that we were going to divest completely from fossil fuels, but we were going to do it in a prudent fashion over a period of time, because it's not a simple matter. We had done the homework, we'd looked at the data, we'd followed the dollars, and you can't divest, as those of you in this room who are also doing it know, by just throwing a switch overnight, unless you're prepared to leave a lot of money on the table, which of course we weren't prepared to do. So we said that we were going to divest from coal and tar sands oil by the end of that year. So between September and December, we were going to be completely out of those two dirtiest sources of energy. And we are now down to 0.1% of our holdings in coal and tar sands. And we said we were going to get completely out of gas and oil over the next couple of years. When we started the process at the beginning of 2014, our total endowment had an exposure of roughly 7% in all fossil fuels. And at the end of first quarter of 2016, we're now down to 3.5% exposure, and we're on a good path. We have some investments that are locked up, and we know, of course, the duration of those lockups, so we can see their trajectory. And, of course, depending on fluctuations and valuations and all of those things, there'll be ups and downs along the way, but our goal is to get as close to zero by the end of 2017 as we can, or early in 2018. And the good news is that we have established we have, of course, a conventional benchmark to kind of compare our performance with, and we established a fossil fuel-free benchmark. And thus far, we've been beating both benchmarks. Now, it's early days, and there's a lot that's going to happen, but, at least we haven't had to reverse course because we don't want to lose a lot of money, because that would hurt our philanthropy. Two other things, and then I'll look forward to your questions. At the press conference, I was asked whether our decision to divest wasn't largely symbolic. After all, we're a fund of, $860 million, not really that significant financially. And I said, well, yes, of course, it is symbolic. But symbols matter. Symbols inspire people. Symbols motivate behavior. And in this case, symbols send signals, market signals. And I believed it when I said it, and I was very happy in the next few months to begin to actually experience it. Two examples. There was a Brazilian infrastructure fund that had approached us in early 2014 to say, would you be willing to invest with us? So we and our investment advisors looked at it and thought, gee, it looks like a very, very good investment. But it had exposure to fossil fuels. And I said, I'm sorry. I'm trying to get ready to announce that we're going to divest from fossil fuels. I'm certainly not going to increase our exposure before doing so. So we said we're not going to invest. About 4 weeks after the press conference where we made our announcement, the Brazilian fund manager called back and said, gee, your announcement made the front pages of the Brazilian newspapers. It's getting a lot of play here. We're thinking about organizing a fossil fuel-free fund. Would you have a look? And we said, of course. And we did, and we gave it all the rigorous due diligence that we give to every investment opportunity, and we've invested with them. This has now happened a second time with another fund. And of the 10%, we have now exceeded the 10%, and most of it has happened since 2014 because the market is changing, as our previous presenters have indicated. The opportunities are growing. The deal flow has been fantastic. So we've already exceeded the 10%, and we just started the discussion with the board about raising the set-aside to 20%, and I think at our June board meeting they will agree to go ahead with that. So this is an important inflection point in civilizational history. It is a time when we have to jettison anachronistic ideas, anachronistic systems, anachronistic thinking, build the new institutions, the new policy frameworks, the new technologies, and the new global ethos that can help us save the planet from certain climate catastrophe. We can do this, and we can do it in this polylateral framework where everybody is doing their part. Governments are setting policy. Investors are divesting and reinvesting. Individual citizens are doing their part. Civil society continues to press and advocate and hold people to account. Critically important. Civil society's role going forward is more important than it has ever been. But we can do this. And I also said at the press conference, because people, recognized there was a lot of irony in a decision by the Rockefeller family through its principal philanthropic institution to divest from the source of the wealth, that, if you study the biography of John D. Rockefeller himself, this was a young man who went to work at age 16 in the 1860s with essentially no money. We have his original ledger book. He made $45 in the first year he went to work, and he gave away $5 to charity. He was beginning already, you could see. By the turn of the century, he was the wealthiest man in the world. And he became the wealthiest man in the world because he saw the future. He saw an economy at the time that was using whale oil for lighting, primarily. And all of a sudden, there was this new resource that he knew could transform life, transform the global economy. And he quickly, voraciously built a global business. And I'm absolutely convinced, knowing that story and knowing the kind of entrepreneur and visionary he was, that if he were with us today, he'd be doing the same thing in the clean energy economy, because he knows that's the future. And he knows that's where prosperity lies. And we now know that not only prosperity, but greater equity, poverty alleviation, and environmental wholesomeness are all wrapped together in the move that we must take rapidly and urgently and with all of our passion, all of our skills, all of our capacities, and all of our resources. Thank you very, very much.
Thank you very much, Stephen. That was precisely what we were after, inspirational and educational as well, so you've delivered well. We have got some mics going around and available for questions, but I first was interested to hear, you spoke about Brazilian influence, and I'm interested to hear about influence in the American investor community. How was their reaction to this and kick-ons?
Yeah, thank you. That's also obviously an extremely important question, and we are seeing real change in the American investor community too. And this is another wonderful coincidence and a kind of a personal story that I love to tell. When we started the process of recruiting new members to our investment committee, we recruited a new chair, and we convinced a very senior partner at Goldman Sachs to come on the board as a trustee and to be the chair of the investment committee. Very smart guy, and a very, very good investor who's been extremely successful. So, and I asked him to come on the committee. I told him what we were contemplating in terms of impact investing and so forth. And I said, I know you're skeptical about this. That's where you come from. But I want you on the committee because I want you to force us to do the rigor that we need to do to convince all of our stakeholders that this is right. So he agreed. And he was skeptical, and he did put us through a lot of serious work. And he ended up saying, you know what, this is the right thing. This is the right thing for this institution, given its mission, and it's the right thing. And increasingly, I think it's going to be the right thing. So he started taking this conversation back to Goldman Sachs. And lo and behold, in about November of last year, Goldman Sachs named him to be the head of all E.S.G. investing for Goldman Sachs. And he would say, if he were in this room, and in fact he was here in Australia last week, it turns out, that would not have happened had he not participated in this internal debate that we undertook at the Rockefeller Brothers Fund. And now Goldman Sachs is beginning to move this way. Morgan Stanley has a sustainability institute. The CEO of that is a wonderful woman who we've also recruited to serve on our investment committee. We're seeing more and more deal flow in the United States. And the investment community is really waking up to the excitement of this. And I think, the trajectories that our friends from Bloomberg have laid out are really inspiring people and exciting the market.
Wonderful. Any questions of Stephen? Over here, Helga. You just state who you are and where you're from, please.
Hi, thank you very much, Stephen. I'm Helga Bergden, Global Business Leader for Mercer Responsible Investment. One of the challenges that we've observed in working with clients, pension funds, endowments, insurers and so on, is this great barrier about the whole idea of divestment. What advice would you give to our investors here as to what would be sort of 3 key things that just help people come to grips with the importance of moving out of perhaps the dirtiest end, the thermal coal, the shale and tar sands, etc., and how to sort of move quickly through that as well as look at the upside. Thank you.
Thank you. So I think I would start with Paris, because I think it really does change things. And a lot of us were very skeptical, given what happened in Copenhagen, that Paris was going to accomplish very much. And it certainly exceeded my expectations. I think it did for a lot of people. And I happen to have been there. It was a very inspiring experience. So I would start with Paris, because I think Paris says to all of us, the world is going to change, and we have to change in advance in order to prevent the kind of drastic change that is underway. And there are ways of doing it that are both successful from the point of view of investment and wealth management, and successful from the point of view of our commitment to this planet and to civilization itself. So I would really start with Paris and get people to really study. And now there are lots of really good analytical devices available for really understanding what happened in Paris, and I thought the presentation today was terrific. Thank you. So start from Paris, and then look at the market trends. Get people, that would be the second. So first is Paris, the world is changing. Second, look at the market trends and look at the cost curves and how they're bending down in the right direction. And third, look at the successful deal flow that does exist. And if you can get people to at least begin doing those three things, most of them are going to come to the conclusion that this is a space they want to be in.
Have you got John, and then here?
Hi, Stephen. John O'Brien from Australian Cleantech. We publish the Australian Cleantech Index and the China Cleantech Index. On the investment side of things, you've talked about clean energy, and the previous speakers talked about clean energy. Have you looked more? Are you looking more broadly across the cleantech spectrum at sort of water and waste and buildings and in cities, and what have you done in that sector?
Yes, we are. We are. In fact, we're looking. We kind of have a bit of a hierarchy of impact investments. We are not interested in concessional investing, and we are not really interested in what in the American philanthropic world, I'm not sure you have quite the same vehicle here in Australia, is known as program-related investments, which are essentially low-interest loans or no-interest loans that you make to grantee-type organizations. Those are good vehicles, but that's not what we're trying to do. We're actually trying to make market-rate investments that are going to produce the same returns as other investments would. So that's the first thing, because our overall goal is that we want to leave this foundation in place so that future generations will be able to pursue their philanthropic goals the way that now 4 generations of the Rockefeller family have been able to do. So in the U.S. context, that means we have to be earning 5% a year plus inflation, because we're required to spend 5% of the net value of the assets every year. So that's a big lift these days in the kind of volatile market environment that we're in. So we're looking for investments that broadly support this very big mission of trying to build a more just, peaceful, and sustainable world. So we have, in fact, some investments in housing, where we are invested in a housing fund that is taking old, energy inefficient housing in urban centers in the United States, retrofitting them, renovating them, creating community centers, trying to get mixed income populations as tenants, support the communities that serve the urban centers, the policemen and the firewomen and school teachers, so they can afford to live in the city. And they have a really good track record. So it's called Turner Multifamily Housing. So that's one. Now that's not quite as close to our climate change passion, but it is very much connected to our overall mission. So there are those kinds of investments. We have some water-related investments, and we have solar and wind and clean energy and other kinds of things. And we're looking at a variety of other kinds of infrastructure development funds as well that support marginalized communities, help reduce energy poverty, and those kinds of things. Africa.
Thank you.
Good morning, Max Horster from the South Pole Group. I'm interested in this front-runner lighthouse role that you've taken in this movement, and do you receive a lot of phone calls from others who want to follow suit, and what are the key questions that they have, and do you also face pushback or even hostility from other groups that now feel under pressure?
Yeah. So the answer to both questions is yes. When we made our announcement in September of 2014, we were one of 181 institutions that had at that point pledged to divest. And those institutions collectively had, I think, something like $50 billion of assets under management. 18 months later in Paris, I participated in the Divest Invest news conference where we were able to say there were more than 500 institutions globally with $3.4 trillion of assets under management that had pledged to divest from fossil fuels. Now, I want to stress, again, I think honesty is absolutely critical in all this because we don't want to lose legitimacy in the movement. Each institution is following, their own path, and some are divesting only from coal, and some are divesting over a longer period of time, et cetera. But at least the process has begun. So the movement is growing, and we get calls every day, really, from various kinds of institutions, other foundations, colleges and universities. I've been meeting with lots of university administrators and lots of students and trying to help move the process along in the university community. But I also, to your second point, to be perfectly honest, I've had some pushback from my peers, other foundation presidents in very significant American foundations with whom we work very closely in our grant making and in many other things, and are very good friends, who kind of run the other way when they see me coming because they have the same kind of resistance on their boards and in their investment committees that we did. So I try to tell them the story. Yeah, I know what that's like, and you just have to chip away at it, and it will take you some time, but get started. Get started. So, and there are others that are. I mean, there are foundations that are joining the movement every week, and we have, some very large ones like the Children's Investment Fund Foundation of Great Britain, some wonderful foundations here in Australia, and it's growing every week. But the pushback is also there.
Last question back there.
Hello, Victor Bavell from Eco Investor magazine. We've been reading some news reports that the fossil fuel industry has been less than honest in its lobbying with government and in the public debate, and that some of their techniques resemble the tobacco and asbestos industries. Do you have a sense of how big that scandal, if I can use that word, might get and where it might lead?
Yeah, well, this is also very, very interesting. We, along with our cousin institution, the Rockefeller Family Fund, actually provided grant funds to a nonprofit investigative journalism team at the Columbia School of Journalism in New York and also at Inside Climate News to undertake the investigations that produced the information showing that ExxonMobil had in its internal scientific analysis going back decades information that said fossil fuels were warming the planet to dangerous levels, and they chose to ignore this. So this has become a very big story in the United States, and we've been, frankly, criticized in some quarters for this, and I'll tell you more about that in just a moment. But what's fascinating about it is that the stories have influenced the Attorney General of the state of New York, who, because of the stock exchange being located in New York, has responsibility for overseeing the reporting to shareholders, and he's now undertaking an investigation of whether ExxonMobil kept information of value from their shareholders. And he's been joined, I don't know what the exact number is now, but I think there's something like 5 or 6 other state attorneys general in the United States who are now joining in this investigation. And it's not quite, it may not be quite as big as tobacco because this is not a tort kind of situation where there could be huge awards to to the victims, but it has significant implications for ExxonMobil. And what tells me they think it's significant is that they have really come after us in a hard way. I mean, if I were them, I would have ignored this. But what they did was they accused us and the Rockefeller Family Fund of mounting a conspiracy against them. And I just find that kind of astonishing. But they're also, I mean, and they had their chance, if I can put it that way. Along the proxy voting path that I described earlier, members of the Rockefeller family who were individual shareholders in ExxonMobil as part of the legacy of their wealth, and we worked together to try to put forward some shareholder resolutions at ExxonMobil in the middle of the 2000s. And of course, we didn't succeed, but we also used the name to get meetings with Rex Tillerson, the CEO of ExxonMobil, that David Rockefeller himself, who's now, by the way, 100 years old and still going strong, one of our founders, one of the original brothers, he called the meeting in his own office, and Tillerson came and essentially wouldn't engage. Just would not engage. And so that actually was an important step in our process, because the family said, all right, we've tried shareholder activism, we've tried using our legacy and history and brand name to go straight to the management, we're making no progress, we've got to turn to other methodologies. So I think it may be the combination of these things. But it tells me that they know they're vulnerable, that they're pushing back so hard on this that I think they feel a little nervous.
Chickens and roosts comes to mind, yeah. Can I conclude with a question about, if I may, the state of the polity in the US as well? And so, in the few minutes that we have left, but it's actually not a Donald Trump question. You may wish to go there or not. But what I was most intrigued about was the number of companies that have just joined the suits to protect the power plant, the Obama's power plants. We've had Apple, Microsoft and others. And so is there a sense of a shifting balance of corporate power as well? That's what I was most interested in, but please feel free to...
Oh, that's a relief. Because I do have to just say, because we work all over the world, I do travel a lot, and it's, I'm embarrassed. And people just are scratching their heads and saying, what is going on in your country, And it's very hard to answer that question. Although there are some important elements to that story. Let me just cut to the good news, I think, in that story. Donald Trump may very well get the Republican nomination, but he will not be president of the United States.
Write it down here.
Yeah. But yes, there is a shift in corporate power in America on these kinds of issues that is very, very encouraging. There is still a major problem, however, and it relates to the larger kind of Trump phenomenon. Both Trump and Bernie Sanders are tapping into a legitimate grievance among millions of Americans, which is that they feel the political system is rigged against them. That their vote doesn't matter, that their voice doesn't matter, that it is the people with money and the power of corporate America that actually control things. And you know what? In a lot of ways, they're not wrong. Their sense of grievance may be exaggerated, but they're not wrong. And what research shows, and one of our areas of grant making is what we call democratic practice, and a lot of it is focused on trying to promote democracy reforms in the United States to rebalance the power in our society by reducing the influence of money primarily. And what the research shows is that money doesn't actually buy the elections, but it does buy policy. And when you have corporate lobbyists spending $3.2 billion in Washington, D.C. in 2015, and you have individual citizens or civil society and NGOs trying to get their point of view across too, you know what the answer is going to be. But there is a shift. There's a beginning of a sense that corporate America has a responsibility to society, not just to shareholders and not just to the short term. But it is still, I would say, a bit nascent. and it needs to be encouraged and developed and nurtured.
And can I ask, is it more than responsibility? Do they starting to see their own long-term economic interest as well, not just a moral responsibility?
I think many of them are. I think many of them are. I think many of them see that if you look at America's wonderful history, we've been our most successful when capitalism and democracy were in a healthy balance, when there was enough of an effective state and enough power dispersed among the citizenry to create a dynamic market that served the broad and created this middle class which sustained the vitality of our country for most of its history. It's out of balance, and that's not good for the economy. Ultimately, that's not good for the economy. It's not good for business, and it's certainly not good for especially the poor and the middle class who are frozen while economic inequality continues to rise. And people are beginning to see the economic argument for readjusting that balance as well. But as I said, I think it's nascent, has a long way to go.
Well, Stephen, thank you so much. I'm sure everyone here will want to voice their thanks in what was a truly fascinating and educational session. Thank you very much.
Thank you.
I'd like to thank again Philanthropy Australia and the Sydney University United States Study Centre who've brought you out. We have brought a memento for you. I think it is of the reef. And I'm not sure if you got out. You were at Lizard Island, I believe.
I did. I went out. I took this opportunity, first trip to Australia in my life. I'm a little embarrassed to confess, but anyway, here I am and very happy to be here. And I took the opportunity to take my 14-year-old son and my wife out to the reef for a bit of holiday before coming into town again. And we spent every day on the reef, and it was inspiring and tragic at the same time, because you see both. You see the magnificent marine life, aquatic life, and then you see the bleaching. And it was a profound experience of joy and of fear.
Yeah. That will drive us forward. Thank you once again. We will resume at 11 back here, but please feel free to go out and network your socks off. Cheers.